Following a quiet start to the week, with London markets closed for 2 days, gold fell on Thursday and Friday, unwinding most of last week's gains. Silver, which didn't rally as much as gold last week, played catch-up on Wednesday, before it too fell on Thursday. That was the day that Federal Reserve Chairman Ben Bernanke appeared before Congress, testifying to the Joint Economic Committee. In fact, gold and silver started to fall before Bernanke began speaking, as markets reacted to his pre-prepared statement that had been published on the Fed's website. Some traders had obviously gambled last week that Bernanke might drop a hint that the Fed would launch another round of quantitative easing and send gold higher. When he didn't, gold immediately started to fall back. If we discount last week's jump, the downtrend in gold prices that began at the end of February appears to still be with us. A key level to watch will be 1520, which has so far offered solid support. As it happens, this trend began with another Bernanke appearance before Congress, where, like this week, a lack of hints about more stimulus saw gold fall sharply lower. In truth, Bernanke said little that was new on Thursday. The Federal Reserve, he said, will take action as needed if the Eurozone crisis escalates. He also described US fiscal policy as clearly unsustainable and urged politicians to deal with it. In this, he was echoing Mario Draghi, the president of the European Central Bank, who a day earlier said that some of Europe's problems have nothing to do with monetary policy and that the ECB should not be asked to compensate for other institutions' lack of action. Central bankers seem to have agreed a common script that involves drawing attention to problems outside their policy realm. However, the suspicion remains that events will sooner or later force them to take more action. Here in Europe, Spain managed to sell €2 billion of new 10-year bonds at a little over 6% this week, but was still downgraded by ratings agency Fitch. Fitch also warned that it will downgrade the United States next year unless Washington develops a credible fiscal consolidation plan. China's central bank surprised the market this week by cutting interest rates for the first time in over 3 years. China was a key pillar of the global gold market. The latest figures show it was the biggest gold buyer in the 6 months to the end of March, overtaking India, where gold demand has been dented by currency weakness. Meanwhile, export data released by Hong Kong this week shows China's gold imports recovered some ground in April, compared to March. Quite a lot of gold came back the other way though, meaning the net figure remains some way off November's all-time record. This weekend sees China publish a flurry of economic data, including the latest inflation and trade figures. There are also rumours that on Saturday, Spain will ask for a bailout of its banks. To keep up with the latest in gold and silver, as well as the wider markets, visit goldnews.bullionvault.com.